Good morning. What a good morning to be a fix and flip and rental property investor. Today I want to give a quick update on fix and flip insurance. So a lot of real estate investors are not very familiar with the specific coverages that are available to protect you from liability. If any damage occurs to your property while you're fixing it up, either if the exit strategy is a sale or ultimately to refinance into a DSCR rental loan, we always recommend having adequate coverage to protect from the unknown. So the first thing is dwelling coverage. Any damage happens, let's say a storm, something out of your control. Ideally, you want the dwelling coverage to be at the very least what the property is currently worth, but as you're improving the property becomes worth more, so we always recommend having coverage for replacement cost, or at least 80% of what it would cost to replace the property. So that's dwelling coverage, and there's going to be a component of your premium that's associated with dwelling coverage. The next very important component of fix and flip insurance, otherwise known as builder's risk insurance, is going to be your general liability insurance. On a personal lines coverage, it would be called personal liability, but since fix and flip loans and the activity of fixing and flipping a property is really a commercial activity, it's going to be a commercial policy, so it's called general liability. Most general liability coverage for fix and flip is going to be $1 million per occurrence and $2 million in the aggregate. So if a subcontractor gets seriously hurt on your property and you get sued, you have a lot of coverage to protect from that, and a lot of coverage ultimately to compensate for any accidents that may occur without you having to be financially responsible. Now, you can also choose what your deductible is going to be. You can have a $1,000 deductible, $2,500 deductible, $5,000 deductible. Most hard money lenders, fix and flip lenders, will probably require that your deductible be $5,000 or no more than $5,000. So if something happens, the first $5,000 is out of your pocket, everything else is covered by the insurance policy. Now, the really cool thing about a lot of the fix and flip insurance policies that we're providing through our platform at Offer Market Insurance is that you can easily convert them into a landlord policy if ultimately you decide to refinance the property once the rehab is done. And essentially you can adjust your coverages, but you don't really need to cancel the coverage and get a new policy in place. So it's really easy to transition from that fix and flip builder's risk policy into that landlord insurance policy. Now, if you need fix and flip insurance or a fix and flip loan, or really any investor focused loan or insurance, head on over to offermarket.us. We'd love to work with you, and have a great day.